Good afternoon, everyone. This is Mohammed here. This is a video I recorded as a feedback for the mock assessment or practice assessment 1 of your final accounts preparation. Just to let you know, because the college has been going through some sort of a severe IT issues last week and so. Therefore, we having some trouble accessing our own, platform. We cannot connect to emails, Teams, let alone, doing our day-to-day work. So we basically, trying to catch up to what we are supposed to be doing. Last week, I meant to send this as a video, but unfortunately, I couldn't record anything since my system was all down, and we only managed to get it back online today. So without further ado, I'm just going to do this with you guys. Most of you done it already. You probably would have done it like, on the in the campus, or you may have done it at home. But whichever you done it, this video I have found in the past, students come back to me with positive feedback saying this is some sort of a way they expected to hear from me as a tutor to show what sort of expectation they have from the students when you faced with certain tasks, and how would I approach it if I'm taking this exam. And obviously I may have different ways to do the same questions, probably compared to yourselves, but end of the day it's all about how you get to the bottom of it. If there is a problem, post to yourselves how are you going to approach this question, and how are you going to prioritize your task and get the best out of it for you. Okay, so for example, this exam's for 2 hours. I'm just going to press the start assessment button here. Sometimes you may not see that when you're doing that from a laptop. You need to zoom in or zoom out here so you can see a little bit further down. But I'd rather have a little bit more here. So what I can do, I can just scroll back and forward here. All right, now the task one is all about incomplete records. The incomplete records are normally given to you. It's like you're going to build puzzles. Puzzles like you're given 5 information out of 6. With that 5 information, you have to find the 6th one. Simple as that one. But they're all interconnected. End of the day, whichever way you're going to do it, you always go back to what missing piece. The one missing piece is always the one if it's going to ask you to move from there to the next section. Okay, sometimes the information you find now, it's imperative or necessary for you to move on to the next question. Sometimes you may just not have any connection at all. You may have multiple different ways of sorting it out. Okay, so the first question here, they're asking you working on an account records of a sole trader ending on 31st of March. So here they're also saying here, general expenses are not processed through the purchase daybook. So that means they're separately. They probably get done, using a cash book, any other way. And then obviously there are some cash sales there. Purchase on credit terms. The trader took advantage of prompt payment discounts whenever it's offered. Okay, so these are extra information, we're going to be working on. So now the next question here, according to this, it's asking you, use only the figures supplied, find the missing discounts figure by preparing the purchase ledger control account. So now if you want to do the discounts, sorry, the purchase ledger control account, what are the information we need there? Okay, so we need nothing from this sales, nothing from the sales return, but purchase and the purchase returns will be there. And then it's also showing that general expenses are not through the purchase daybook, so we don't need that. But we do need this trade payable balances, the opening balance and the closing balance. They are necessary for us to work out the purchase, the ledger control account balances. Then also anything else from this bit. In this bit, if you look at it, it's the payment and receipts recorded in the bank account, the cash book side of it. So if you look at that now, amount from credits customers, not necessary. Why? They're for the sales ledger control account. Amounts to suppliers, definitely going to be in the purchase ledger control account. Do we have anything else we need to be taking an eye for? No, everything else is nothing to do with my suppliers or the purchase ledger control account. So what we now be going down here, and we have to find out how we're going to construct it. Also, please remember there are no dates given in this one. So whichever order you do it, it doesn't matter as long you have your debits and your credits done on the correct side. Most importantly, because you have to decipher what type of account that is to start with. The purchase ledger control account, it is an account from suppliers. Uh, my daughter just bought my scientific calculator, so I can do that questions while I'm doing with it now, instead of just going through my phone, which I really hate doing it. So now here, purchase ledger control account is an account we're going to deal with any credit suppliers. That means generally this is a liability account, because this is something it is going to show the collective amount we need to settle with our suppliers. So they basically, the opening balance or the balance brought down must be on the credit side on that. So according to this here, the opening balance, it is similar to the closing balance here, will be 13,345 on the credit side. So we're going to here establish this one 13,345 on the credit side. Okay, and then obviously if you have a credit balance here, the closing balance or the balance carried down should be this side. You could do that here, you could do that here, you could do that here, doesn't matter. I always do the balance carried down as the last entry as possible. The amount for that one, it's going to be 14,656. So 14,656 pounds here. And then obviously we're going to look at the other entries we need to be entering in that system. So the purchase will be entered from the day book. Normally from the day book, the total amount will be get entered into the purchase ledger control account. So in this example, 149,348 will be entered into your purchase ledger control account. And which side of it we're going to enter it to? This is going to be entered into the debit side or the credit side. Again, please remember, if you want to 100% confirm what they are, the goods amount or the net amount, it will be going into the debit side, because the purchases account is an expense account, and the VAT will be also debit. The total will be on the credit side. So 149,348 will be on the credit side, and we're going to say 149,348. Let me just check whether that's the right amount again. Yeah, and this we're going to be extracting from our purchase daybook, because that is the daybook we were discussing earlier. And do we have any sort of a entry for the purchase return daybook? No, there's no purchase return. So we confirm these are already been done now. And what is the other entry we are missing at the moment? We have entry for the amount to suppliers. So how and which side I'm going to be entering this? You also ask that question to yourself. If money coming into your bank account is a debit, if the money goes out of your bank account is a credit. So if the amount we are paying to supplier bank account will be a credit, and the purchase ledger account is going to be a debit entry. So 145,137 pounds. This is all been sorted now. Now we have a balance of 159,793 on the debit side and 162,693 on the credit side. According to this question, all we now have to do, using only the figures supplied, find the missing discounts figure by preparing the purchase ledger control account. So now, which side the discount amount is going to be going into? So if you have a credit account, a control account there, if that amount is normally going to be increased by putting something on the credit side, like more purchases, but the discounts or the returns or any contra entries will be going on the debit side of the purchase ledger control account. Why? These are the entries to reduce the balance we owe to our suppliers. So here what we got left with is going to be the discount received, not allowed, because you cannot allow discount to our suppliers. You can only allow it to your customers. Here for the suppliers, we're going to find the discount received. So the difference between those two accounts is going to be coming into, let's see, 162,693 minus 159,793. That is going to be a total of 2,900 pounds. Okay. So this amount is what we're going to be entering into my purchase ledger control account. Now what they're saying here, using the only figures supplied, find the closing balance on the VAT control account of the year ended in 31st of March 2017. Note the business not charged VAT on its rent. Anyone charges VAT on their rents? I just don't think so. But we just have a look at it quickly. Then also there is a catch for this one, because in fact, if you look at that now here, all my VAT are recorded here. See that here, VAT here, VAT here, VAT here, and VAT here. And then also there is a VAT opening balance here. And then this is going to be something they ask us to find out later on. So what we're going to do now, we're going to have a look into this and then also look for certain transactions from that cash book side of it as well. There is something there we have to enter later on. Okay, but let's start with the beginning part of it. VAT account has an opening balance of £1,806 in the credit side. So we're going to do balance brought down £1,806 on the credit side. And once we've done that, we have to look for any other entries we need to be account for. So the first part of it we have VAT from sales 31820. So if you remember from initial talk we had, your purchases and the VAT from the purchases entered on the debit side, and the sales and the VAT from the sales going to be entered into the credit side in their relevant T accounts. Why? Because this is an income account and this is the VAT we collect from our customers. We are all back to HMRC. So this is a liability VAT, or what we call simply is going to be the output tax. So here we're going to simply say sales daybook here, and we're going to call the purchase daybook this side. If your sales book's on the credit side, sales return daybook is going to be on the debit side. So let's go and have a quick look at that sales return. And then obviously we have more VAT to account for on the general expenses. If the expenses account a debit entry, the VAT £1,502 is going to be on the debit side as well. So here we're going to have a quick look at that. And general expenses, where are you? There you go, general expenses. Do we have anything else we have to account for? Also notice here, cash sales of £4,200 excluding VAT. If you look at that here, the amount banked from cash sales 5,040. So this is the net of that amount, and the VAT is going to be something between difference between those two. So that's going to be £840 also need to be recorded into the credit side of my VAT control account, because this is your entry for your credit transactions, and this is going to be your cash sales transactions. Okay, so that amount we have to enter that here on this table. And also please not to forget this HMRC VAT payment. So if you pay HMRC anything, this is going to be a debit on your VAT control account, credit in your cash book, because the money is going to be going as a payment. So money out of your cash book is going to be a credit entry, and this is going to be a debit entry. So I'm going to go and quickly do this entry from bank. So let's now populate this VAT control account with all the necessary figures quickly. So sales 31820. So let's put that down here. 31820. VAT from your purchases is going to be 24408. 24408. Sales returns 322. VAT from general expenses 1,502 here, and the cash £840, and then obviously the amount paid by the bank, it's going to be 6169. So 6169. Still, if you look at that, the amount on the credit side is greater than what's on your debit side, so your balance carried down figure will be on this opposite side. So let's find the difference. 34466 minus 32401 That gives me an amount of £2,065 will be your new VAT liability. Okay, so this is the amount you need to find by entering all those figures. They all we want you to do is find out what is the closing balance, okay, which is this one. And then if you go further down, it is showing you these are the entries you made into the cash book, the receipts and the payments. Assuming there are no year-end adjustments, what will be the opening bank balance in the general ledger on the 1st of April? So if you notice that here, the closing balance for the previous months, or the opening balance, or whatever we call that here, the amount we got, £3,811 on the debit side. This is the amount we have. Now, if we have more receipts, the receipts get added to that debit balance. Why? Because receipts are on the debit side of your cash book. 200,448 minus any payments, 205,718 pounds. That leads you to give you a negative balance, 1,459 pounds. So 1,459, because this is a negative amount, means this is overdrawn bank account. If it's overdrawn bank account, the balance will be on the credit side. Okay, that's all you have to look for. So what in this kind of a question, what are the important things? Please remember, there are so many information there. You may not need everything, because you need to only target what is going to be used to affect the account you're actually looking at now. Okay, so like the sales return, these are used for the VAT calculation, but there are some other entries here like loan, rent paid, drawings, wages, amounts from credit customers. These are not going to be used at all in any of the calculation. Maybe they already been accounted for in your receipts and your payments. Excuse me. Now let's move on to the question number 2. Okay, this question number 2 is it's more about accounting principles, and still obviously it's going to be calculating your margins and markup there, and then obviously yeah, some logical questions there. It's not a big one anyway, for the total of 15 marks. So let's have a quick look at the first question here. All right, now for this one, just going to share a different screen quickly. Let me share this as a screen. So here, I'm going to bring you up an Excel spreadsheet. Quickly show you how margins and markups are calculated. Margin, markup. Okay, so here, margin, what is 100%? Here, sales revenue is your 100%. On the markup is cost of sales. So remember, these are the fundamental part of it. So here, whatever margin is going to be a gross profit, and the markup is going to be a gross profit. So to find out what is your cost of sales, so if you to find the cost of sales is going to be sales revenue minus margin. Okay, shouldn't say minus. What do you need to do? You had to find out by this way. So to find the cost of sales, there's let's see this way. Yeah, cost of sales is going to be 100 minus margin. Those two divide by sales. To find the sales figures, if you're given a margin percentage and the cost of sales because they're not 100%. There is a way you can work that out. Let me think about it. How would you do it? To find that amount, cost of sales, find the markup percentage. There should be a formula for that one, but I'll have a quick look at that for you. But this is the fundamental part of it. So the markup is going to be added like this way. So if you want to find that cost of sales for that one, cost of sales multiply by markup is your gross profit, and then you're going to add any cost of sales original figure. So basically we're finding the gross profit and then adding the cost of sales again to find the full sales revenue. But again, this is too many numbers, sorry, the words. Let's make them into a number. So let's go back to this question again. They're asking you here, the percentage itself, the gross sales margin percentage may be calculated as gross profit divided by sales. As I said to you before, on your margin, the 100% is going to be your sales revenue. So that makes sense. So if you want to find out the percentage, you're going to divide the gross profit, which is your margin, by the sales, which is the 100%, by and then multiply by 100%. Okay, so this is making total sense. For example, if they say your gross profit is £10,000, your sales what do you call revenue is £50,000, your margin is, or gross profit margin, or the gross sales margin is going to be 10,000 divided by 50,000 multiplied by 100. It's 20%, which is absolutely right. It is true. Okay, but until we see a practice question of it, it will look a bit odd in there. But let's see this now. So this question here, it is going to be something, it's going to be helping us to find out whether we're doing the right calculation or wrong. Okay, let me just quickly do this now. Can I bring this up? Let's see, Excel, word it. Not this one. Yeah, Surpass doesn't let you to do that way, like splitting the screen. So let's do this here by paying attention to that question. So here, I'm bringing a spreadsheet up now quickly. Okay, let me readjust it quickly so we can see all of that question. All right. Please don't give me nightmare. Right. All right. Okay, now, yeah, I think I can see the question a little bit more clearly here. So here, what they're telling you, the business is not registered for VAT, trade operators, gross sales margin of 25%, inventory at 1st of April was 5,050 pounds, sales was 64900, purchase were recorded 48,390. So what we now have to remember, we have one of the important part, which is your sales margin. So if you know your sales margin and your sales figure, you should be able to find out how much is your gross profit or your cost of sales. If this is 100%, gross sales margin is 25%, your cost of sales is going to be making up the rest of it. If it's going to be a whole pie, a quarter of that is going to be your sales margin. The 75% is going to be your cost of sales. So this way, to find the cost of sales, all you need to do, okay, equal to 6,900 multiplied by 0.75. So this is your cost of sales. I found the cost of sales now. Then we also found what is your opening inventory and what is your closing inventory. Okay, so not the closing inventory, your purchases, and they want you to find the closing inventory. So let's put this answer here: 4867 or 675 48675. Okay, now to find the closing inventory, all you need to remember this formula: opening inventory plus purchases minus closing inventory is equal to your cost of sales. Because you have already your cost of sales, you already have your opening inventory, you also know the purchases figure. All you need to do, swap this closing inventory to the other side and the closing cost of sales to come to this side. So you can change the formula to opening inventory plus purchases minus cost of sales is equal to closing inventory. Okay, so the amount now we're going to find out is equal to 48390 plus 5050 minus whatever figure we have there. So that is going to become to 4765. 4765. Okay, that will be the final answer there. 9 marks for that, to be honest. So it should be a straightforward calculation on one way, but you need to make sure you get to the right fundamental idea of the margin and the markup, because margin is going to be counted as 100% your sales revenue. Whatever margin is going to be your gross profit, and whatever left after that is going to be your cost of sales. Then again, have a look at this. You compare this figure with the results of physical inventory count as of the year end. The total physical inventory value is 350 pounds lower than your calculation above. So you already have this amount here, 4765. But when we done the physical count, we found our inventory value is 350 pounds lower. What could be the reason for that? Some equipment used in the office was stolen during the year. Do you think the equipment is part of your closing inventory? No, it is something of an asset. It's nothing to do with your day-to-day, what do you call, sales or purchases. So therefore, this is going to be not affecting your closing inventory value. There were unpaid sales invoices at the year end. Why the sales revenue is going to be anything to do with my closing inventory? No, so that is not going to be an answer. A high value item was included twice in the count. So on the count, if you included twice, that should be higher, not lower. So that is definitely not an answer. If you eliminated the first three, the fourth one should be the right one. That's why you think, but let's check it whether that's correct. The trader has made drawings of goods during the year. So that means if he's taken some of the goods from the inventory for his personal usage, that means the physical count will definitely show the lower amount than what it shows on the paper. So that is probably the right answer there. So they're asking you to update the value. Now, all you need to do is take 350 away from there. So it's going to be 4,415 pounds. Okay, that will be the final figure for this. And then also saying, which of the following is most likely to be the total of the sales ledger at the end of the financial year? So they're saying here, the customers are allowed to settle their account 1 month after the sales made. So if they want to settle the bill after 1 month, normally they should have only 1 month worth of sales outstanding at the month end, no more than that one. So if your yearly sales figures are 64,900, that means every month the sales is going to be, on average, is going to be about 64,500 or so 900. Divide by 12, it is going to be coming to nearly 5,400 pounds. So that means every month your sales is going to be 5,400 pounds, something like that way. So that means they will normally take 1 month to settle it. So your balance of the ledger should be around that figure every month. It cannot be 64,900 because that is if they don't settle any bills at all. 16,225, it's also way beyond your monthly revenue. So therefore, the only option is going to be closer to that amount, £6,940. Okay. Next one, you're now working on final accounts of another client. The manager is called away unexpectedly. They ask you to undertake a particular task. If the deadline during his absence, you know you have not received sufficient training to do so. So what do you need to do? You have to think about what is the best course of action. Do the best to your ability, submit the work to the client on time. So you are risking yourself making mistakes and obviously making more of a problem for you for later on. But on the other hand, you may ask for support elsewhere on the organization. Of course, you can speak to one of the manager or another line manager or a supervisor or a colleague and find out what sort of a support you may get to complete this task. Ask a family member who's a qualified accountant to do the job for you. What is this going to be breaching for you? This is going to breach the principle of confidentiality, because even though he is a qualified accountant, it doesn't work for your same company. Obviously, that is going to be breach the confidentiality. Advise the client that the deadline will be missed, which is also not the right thing to do, because obviously the task was set upon you. So you need to find out how you can get it done best to your abilities. Plus you need to make sure you get that right. So that means the best answer in this scenario is going to be the second one. Now let's move on to the third question. We almost half an hour gone. We've done 2 questions. We still got 4 to go. I think we are in good track of time. Now, this task about final accounts for sole traders. You have the following information about the events on 1st of January 2017. A sole trader started the business. Business was not registered for VAT. Sole trader transferred £13,000 of own money into the bank account. 1,100 paid from this account for some office furniture. £900 of goods for resale were purchased. The supplier allowed 1 month of credit. Again, there is so much information there. Do you think you need all of that information to fill out the particular account they have given you here, which is just the capital account? When it comes to capital account, all you need to do is only when the owner has invested money in the business. Nothing else you need to go in there. They didn't ask you for the bank account. They didn't ask you for the furnitures account. They didn't even ask you for your goods for resale account. That means your purchases account. So therefore, only account is going to be accounted for is the capital account. That is when this 13,000 was paid, debit into your bank account and credit into your capital account. So we're going to say here, bank, £13,000. And obviously, there's no other transactions to go for. So we have a balance carried on figure of £13,000. You can fill that here or you can fill that there. It doesn't matter where you do. You will still get marks for that one. Now let's go further down. Now you are now working on the final accounts for another trader, Onyx Trading. The final trial balance is below. The profit is 42,495 has been recorded. Onyx has a policy of showing the trade receivables net of any allowance for doubtful debt. Allowance for doubtful debt can be shown as the net of your trade receivables. Okay. Or you may put that as a current liability. But at the moment they've done it this way, it is also absolutely fine. So what we now have to do, look for those 2 figures. So here, according to this, I have, in this part, I have sales ledger control account, £25,660, and allowance for doubtful debt, which is also a credit account. Please remember, this is something we write off against our sales ledger control account. So this is always going to be a credit amount. Allowance for doubtful debt adjustment, though, it can be either credit or debit. It depends on increasing or decreasing of it. Okay, Alisha? Bear for a second, please. So what we now have to do, we keep an eye out for that 2 figures. The first one is going to be the sales ledger control account, which is 25,660 minus the allowance for doubtful debt of 1,200. It is 24,460 pounds. Okay. We're going to say 24,460. It is going to be allowance for doubtful debt net of that one, which is your trade receivable net of allowance for doubtful debt. Okay, now we got that figure out of the way. Now we can fill out the rest of the information in this trial balance, from the trial balance into your statement of financial position. So here we're going to look for what other transaction we need to be recording. Not every transaction from here has to go here. Why? Because profit and loss statement will have your incomes and expenses. The assets and liabilities will be going into your statement of financial position. So here, accruals, allowance for doubtful debt, bank, capital, closing inventory, drawings, equipment at cost, equipment accumulated depreciation, payroll liabilities, prepayments, purchase ledger control account, sales ledger control account, and obviously the VAT account. These are the ones we need to be accounted for in this statement of financial position. The rest of those on the other ones are either going to be an expense or an income. Their income is going to be just the sales, and if it's potentially going to be a disposal form for your non-current asset, the rest of them are all expenses. So these are expenses here, expense, opening inventory is going to be part of your cost of sales, so there's going to be an expense. Payroll expenses, purchases, rent, and your sales return is going to be opposite to your sales. So they all will be going to the profit and loss statement. Trust me, if you use this, whatever outstanding figures, and trying to look for your profit, that amount will come to 495 pounds. But please do not waste your time on it. I took that up on as a challenge once. I have looked at it to see whether the answer was right. It was right, but it's no points for that one because you only given task to deal with the other ones. So the only non-current assets in this set is going to be my equipment at cost. So let's select that one here. I'm going to put it down, equipment. The equipment at cost value is going to be 32,800 pounds, and the accumulated depreciation for that one is going to be 350. So therefore, the amount I have left with is going to be 18,450 pounds. Okay, and then what else we have on the non-current assets? Nothing else. There's only one box, and we got that filled out. And the current assets. Current assets now at the moment we have, according to this, is going to be my trade receivables, bank, closing inventory, if I can find that here. Yeah, that's an inventory. And one more, which is your adjustment, which is going to be your prepayments. These are your current assets. The current liabilities, on the other hand, also trade receivable means you have a trade payable there. If you have bank, no, there's nothing to worry about the bank, but we have accruals, payroll liabilities, and last but the least, the big one, the VAT. So these four will be your current liabilities. So then once you find those accumulated amounts there, you'll be able to find the net current assets. And then when you're going to add them together with your non-current asset, you should have your net assets. Okay, so let's find out figures for you. So the trade receivable, we worked out 24,460 because it is net of your allowance for doubtful debt. We're going to use that figure here. The bank amount is going to be 1,645 pounds. The closing inventory, on the other hand, is £22,420, and the prepayments is going to be £900, and then trade payables. It is under purchase ledger control account, so that is going to be £16,720. Accruals, £1,940. Payroll liabilities for £630. Last but the least, we have VAT for 3890. Let's work out the total amount due now. Okay, so here it is already calculated that amount for you, and they've given you the subtotal here. So the net current asset on this scenario, 49425 minus 23180, it's going to be 26245, and then you're going to add that together with your non-current asset figure, which will give you 44695. Okay, now we're going to go into the finance by section. We're going to look at the opening capital amount of 22,200. We're going to add any profit for the year because they have said there's a profit there. The profit was 42495. 42495. We got that figure, and take away any drawings. So the less the drawings amount is going to be here for the value of 20 grand. So altogether, if you add these two and take that away, I'm going to get 44,695. How I got that quickly? All I need to do is find the net of these two amounts, 2,200, add it together with this 22 added, so 44695. I've got that figure, and that matches my financed by section to your net assets. So therefore, our calculations are done impeccably. It is perfectly sorted. Now let's move on to the next question. Next question is also type of questions you're going to be asked about some, general knowledge of the final accounts preparation. It's more of a theory bit of it. So here they're asking you, which one of the following statement, which one of the list below is a benefit of running a business as sole trader? Sole trader has its pros and cons, but here it's asking you the benefit. Unlimited liability. Do you think that's going to be a benefit for you? No, that is some kind of a cons. And then limited liability, it's not true because as a sole trader, you don't have a limited liability. So therefore, that is completely a false answer. Complete control over business decisions. Of course, as a sole trader, you are the only one have the ultimate choice of what you want to do and what you don't want to do. Therefore, that is absolutely right. That is the biggest benefit of being a sole trader. No requirements to prepare annual accounts by a certain date. That's totally wrong because you still have requirement to submit it, but you can't say there's no requirement at all. Okay, you have a little bit of a leeway, but of course, you have to submit accounts for this. A private limited company is owned by its what? It's going to be either partners or shareholders. Here, according to this, is going to be a shareholders. It's not about directors. Directors don't own the business. They make executive decisions. That's all about it. Which one of the following business have owners with limited liabilities for its debts? So anything with an LLP, limited liability partnership, or PLC, public limited company, these two will be having limited liability for your debts. So that's going to be 2 and 3. Number 1, it's not. As a partnership, they have certain benefits, but they're not having any limited liability for their debts. Okay. To be a charity, an organization must satisfy the definition of a charity found in the Charities Act, not with the Code of Practice for Non-Profit Organization. No, there is no Code of Practice like that way. Its purpose must be for the benefit of the society or the public, not for the charity itself. So it is going to be not for trustees, it's for public. Okay. And then obviously, which one of the items below prescribes the format of the final accounts of the organization adopting IFRS? It is going to be IAS 1. IAS 2 is for your inventory. IAS 1 is going to be the format of the financial accounts. I don't know what is IAS 2012 means. Basically, I'm lost there. So here, the third one for 4 marks, part C, link the boxes to match the following uses of the financial account with the most likely reason for their interest. So this most likely reason is what? For management, out of these all answers, I possibly say assessment of security of any loan. No, I don't think that's going to be any loan. Decision making relations to their personal investment. Management don't worry about their personal investment. To compare the information from other organization operating within the same business sector. That makes more sense to me, but let's keep it that way. To assess the future performances of the businesses. Future performance of the businesses, we can't do anything with the final accounts. Future performance is going to be something we have to do with budgets and check the how successful the budgets are cascaded to. So that's nothing to do with that one. So it's going to be these. Shareholders, on the other hand, yes, of course, their personal investment might be the best choice for that answer. Basically, we got this question done in 4 minutes. The question itself is 16 marks, though. It's all about theory. Okay, so please see these kind of questions might take very less time, but obviously you can bear the huge amount of benefit from it getting it correct. So here, next one. This task is about accounting for partnerships. Which one of the following should be included in a partnership agreement? A partnership appropriation account, it doesn't have to go on the partnership agreement. Only have to have the terms. You don't have to do an account itself there. Salaries and wages paid to all the employees, nothing to do with the partnership agreement. This one will be going their payroll. Payroll will be eventually cascaded into your profit and loss statement. The rate to which the interest to be allowed on capital. Yes, that can be included into your partnership agreement. Of course, that is something going to be affecting the partner's current accounts. So now we're clearly into a retirement, means partner leaving the business. So therefore, we have to create a goodwill account, and then we have to write it off. But when we're going to do the goodwill account, what you need to remember, the part of it, the first part we create, and the second part is going to be writing off. The retiring partner will not have no impairment of goodwill on his hand. What he does, he will take his part of goodwill, add it to whatever he's got outstanding, and then he get cashed out. So for that one, I'm just going to go quickly show a sample of the capital account. Okay, so we have Riva, Sam, and Terry. So here, just going to bring it up here. So a capital account before Riva, Sam, Terry. Excuse me. So Riva, Sam, and Terry. This is how their capital accounts should look like. Initially, they'll have amount on their credit side. Okay. So this is going to be how their T account will look like. I hope I can get something clearer this way. So this is their T accounts for their capital. Okay. I'm going to pull a similar type of account here, but this time this is going to be your account. But what do you need to remember? When you're going to create the goodwill account initially start with a debit entry into there. If you notice that the goodwill was calculated at £52,000, and there are altogether 50% for Riva, Sam got 40%, and Terry got 10%. So that means you can split that into 10 pieces, 5 for Riva, 4 for Sam, and 1 for Terry. That makes more sense. So each part is going to be worth 10% of that amount, which is going to be £5,200. So here, when we're going to create the goodwill into the account, So the amount we're going to be creating for Riva is going to be £26,000, 2,800, 20,800, and £5,200. So this amount will eventually go into these particular accounts accordingly. Okay. Then now, when you're going to write this off, we're going to have a new percentage of 7 and 3. So therefore, 7 parts will go to Sam and 3 parts will go to Terry. And Riva will not take any impairment of that goodwill. So what we now have to do, we need to find out how much is that amount is going to be. So this is going to be equal to that multiplied by 7. And this is going to be that multiplied by 3. I'm just being lazy. I should use that 5,200, sorry, 52,000 divide by 10 multiply by 7, but I already know this is only one portion of it, so multiplying that by 7% and this multiplying by 3%. So your goodwill account should look like this. Okay, so now if I want to do that here, I'm going to simply say capital account for Riva, capital account for Sam, capital account for Terry, and then again capital account for Sam and capital account for Terry. The amount is going to be here 26,000, 20,800, 5,200, and then again 1364 and 156. Okay, 364 156. That's it. There is no carryover balance on this goodwill account. Why? Because this goodwill is created and then written off at the retirement of the partner leaving the business. Okay. So what eventually happening here, basically Riva is walking away with extra £26,000 for in addition to whatever he has or she has in a capital account and the current account, because that is the value of the goodwill was left on the business for that particular partner. And then here it's even a little bit bigger question. And then this is something to do with partnership account with Ben and Asma and Ben. It's about appropriating their profits. Okay, so if you look at that here, there's no interest on capital or drawing, so this is going to be fairly straightforward. And then also there's showing now the figures are for the year ending on 31st of December. So Asma got 60% of the profit share, Ben get 40%. They get salary entitlement per month of 1950 and 1400, and then yearly commission for sales for 4,500 and 8,300. And then obviously there are some drawings we need to keep an eye out for. But is that going to be any matter when you're going to do a partnership appropriation? Partnership appropriation is only about the additional in and outs. It is not going to include any drawings there. The drawings get accounted for in the current account, not in your partnership appropriation account. Here we're going to add and remove anything like an interest, a salary, anything is going to be having impact on the profit for the year. Why? The drawings is not going to have no impact on the profit because it is going to be taken against your balance of your current account. Okay, now let's have a look at this quickly. Amount of partnership the profit of appropriation is going to be £80,000, and we're going to take away anything like salary and then obviously commission. These are the additional thing. You cannot record that into your the profit and loss statement because these are not paid outside, it's paid within the business. Okay, so here they also said enter any deduction as a negative figure. So these are going to be your negative figures because this is something the business is paying out. Okay, so here negative 1,950 multiplied by 12, 1950 multiplied by 12 is going to be £23,400, and definitely going to be a negative in there. This is also negative 1,400 multiplied by 12, £16,800. And then also we have a negative figure of 4,500 per annum for the sales commission, and then negative £8,300 for sales commission for Ben. So we're going to add all of that together, 23,400 plus 12,800. £53,000 is going to be taken off for any what do you call to find out what is the residual profit available for distribution. So if you take that all away, I'm going to be end up with £27,000, and this £27,000 is going to be split among, well, yeah, that's fine. So it's going to be split among the other two. So £27,000 multiplied by 0.6 is going to be 16,200 here. That is going to be your profit share for asthma, and profit share for Ben is going to be whatever left over. So it's 16,200 divided by 7 multiplied by 3. Hold on. 27,000 multiplied by 0.4 is going to be 10,800. So the total amount is going to be again £27,000. So the amount what we're showing now, this is the share of their particular profit or loss in the scenario. Profit for both of those partners. On 3rd of January 2018, Ben takes some goods for home personal use. His current account will be what? Will that be debited or credited? So if something used from the goods there, the goods have an inventory account. If it's going to be taken away from there, it needs to go on the credit side to reduce that value. And therefore, the current account for the owner will be debited, because that is also some sort of an expense. Okay, so for you, the current account will have a debit entry. If we owe something to the owner, the current account will have a credit entry. Okay, so in this scenario, the owner has to take something away from it. It's similar to your drawings account. Drawings account will have debit entry whenever the owner takes money out. Okay, that question's also done. Now we're left with question number 6, and we only have 1 hour, 4 minutes gone so far, 55 minutes, nearly 60 minutes. We will be almost done with this. Okay, but let's have a look at this question now. So now we got a question about profit and loss statement. Here we are preparing statement of profit and loss for the Onyx partnership of the year for the year ending on 31st of March. Partners are John and Pat, who share profits and loss equally. This is their only entitlement of profit. So to the profit. Let's have a look at this. Yeah, this is all standard there. Okay, so here the deductions of an account balance used to make up cost of goods sold or a loss of year. So for these only you can use a minus sign. So if there is a deduction like a closing inventory balance, you can do a minus figure here. And if you have a loss, and you can do a minus figure there. Until that, apart from that, you don't have to use any negative figures. So this question is for 21 marks. It looks fairly noxious here. This part of it is going to be for 14 marks. So let's crack on with this bit. Okay, so let's look at what we need for that information to be cascaded in this part. So do we need to have accruals? No. Allowance for doubtful debt? No. Adjustment of the allowance for doubtful debt? Yes. Bank? No. Capital? No. Cash? No. Closing inventory? Yes. Part of it is going to be used to calculate your cost of sales. Depreciation charges? Yes. Loan interest paid? Yes. Office expense. Opening inventory used to calculate your cost of sales. Payroll expenses, purchases, sales, selling expense, and that's it. There's nothing else will go into your profit and loss statement. Why? The rest of them are either asset or liabilities, which will be accounted for into your statement of financial position. So for us now, most important part is only profit and loss. So here, sales revenue. Now, what we have at the moment, 255, 480. And here to find the cost of sales, we're going to do opening inventory. Find purchases, closing inventory. Let's do those figures quickly. Opening inventory here, 24,500 pounds. Purchases is going to be 153,670. Now, closing inventory, as our condition before, we need to put a negative figure there for the amount of 25,100 pounds. And that should give you the cost of goods sold. So here, 24,500 plus 153,670 minus 25,100. That gives you 153,070 pounds. And you take that away from your sales revenue, 255,480. Let me get that right. 102,410 pounds. 102,410 for your gross profit, and adding anything else. So what we need to add here, remember I spoke to you about earlier, the adjustment for doubtful debt. Okay, this is allowance for doubtful debt adjustment. This can be either a debit entry or credit entry, on depends on whether this allowance for doubtful debt increased or decreased. If this entry is on credit, that means the allowance for doubtful debt was reduced from a higher value to this side. Why? Because this account, to reduce it, we need to debit that account and then credit the adjustment account. So that is the only way this can happen. And also please remember, because this is on the credit side is normally like an income to you, isn't it? So that get added to your profit. So here, allowance for doubtful debt adjustment, 600 pounds will get added here. And then obviously any less other stuff like depreciation charges. So let's do the depreciation charges. And you have loan interest paid because that's an expense. Not that one. Loan interest paid. Then you have office expenses. And then you have payroll expenses. And then last one is going to be your selling expenses. All these expenses will be recorded here. Depreciation charges are 9,700 pounds. Loan interest paid is going to be 168 pounds. Office expenses is going to be 31,630 pounds. Payroll expenses are 16,950 pounds. And the last, the selling expenses of 10,542 pounds. So that should give you the value of your total expenses at 9,700 plus 168 plus 60 plus 16950 plus 0542 68990. Okay, and then if you're going to find the profit or loss for the year, 102410, add 600 to it, minus 68990. That should give you 34,020 pounds. Okay. That would be the answer. So then again, calculate the John's share of profit and loss for the year and his final current account balance. Use the minus sign to indicate loss for the year if necessary. So here, the profit or the loss get adjusted for the current account. Current account is already in credit, which is something we owe to them. So 780 pounds plus the half of that profit or loss. So we're going to divide this by 2. So we're getting 17,010 pounds plus 780. That will give you 17,010 pounds. Added that 780 together, 177790 will be the final current account balance, because this will get added to the current balance. And then obviously they're asking you, where will the current account balance for John appears on the statement of financial position? Of course, this is going to be in the financed by selection section. So if you want to go back and check it again, can you see that here? The financed by section for the partnerships, they will have their the current account balance and the capital account balance. They get all added together to find the whole amount there. Okay, that will be the for the partnership accounts part. Now let's look at the last bit of this question. They're saying here, preparation of the final accounts for limited company and at its year end requires more detailed reporting than of the sole trade or partnership. Which one of the following statements are true for a limited company? A taxation charge should be shown in the statement of profit and loss. Of course, there has to be shown. A full analysis of the current asset, non-current asset, must appear on the face of the statement of financial position. That is not right. You cannot say must appear on the face of the financial statement of financial position. No, it doesn't have to. They can do that as an annex, but it doesn't have any compulsory reason to put that down a full analysis of the non-current assets on the face of the statement. Now you don't have to. The word must always going to be used as a double-edged sword. So if there is an opportunity you can disprove it, these words are the one you're going to take into consideration. So don't worry about it. Whenever you see must or always or only, those three words can be used as the deterrent for whatever decision you're going to make, because you need to be absolutely sure. If you want to be must, that's going to be 100%. This is no way you can what do you call, confirm that statement is going to be true 100% if the word must used there. If they say can be, yes, it can be. Must is 100%. It's not 100% for that. So that is definitely not the right answer. And the third one is notes to the financial statement are available to the third parties. Of course, it can be made available. So the answer is going to be 1 and 3. And we are at the close of our first practice assessment, first submit assessment. Let's see how I fared. Oh, it's saying I'm competent for a change. That's good. So guys, please remember, when it comes to this practice assessment, it gives you ample opportunity to practice and practice and practice, do different type of questions. But when it comes to the exam, it's more important for you to remember how you're going to prioritize your questions. So if you're stuck on any questions, or if you think, oh, I might not be able to get that answer straight away, get it out of the way, what you should do, you flag it and move on. Don't need to be stuck on one question there forever, and then obviously you will miss out on easier part of the exams later in there. So what I'm suggesting you, whenever you're going to practice, you always have to think about how you're going to assess your timing there. So let me just get out of here quickly. So now, just to let you know, today, exams for the evenings were cancelled because of the IT issues I mentioned earlier. There's a possibility your exam might not go ahead tomorrow. It's only a possibility. We are working really hard. I'm working with the exam department. I'm also part of that. I'm also teaching AAT. I'm in the invigilation. And obviously, so I have some sort of an insight of how it's going on there. The head of exams, she gave me a guarantee. They're working really hard to make sure the exam goes on tomorrow. But if for some reason exam cannot be done because of this problem, what we will do, we will let you know in advance, and then obviously we try and reschedule it on a in a most appropriate time, possibly week or so, maybe 2 weeks time, because you have the class next week, so it possibly we're going to be week after. But as I said to you guys, I'm trying my best to help them around as well, to see what we can do to get this the temporary setback for us we just faced with. But obviously don't worry, We're here to help you. In case you're stuck or you're struggling or you need extra support, please make sure to give me a shout. I'll try my best to work my way around trying to see whether we can get that something sorted for you. And obviously, please still prepare for your exam. Be ready. In case if you can't, we can't get that going, don't worry, we can get that sorted for later on. But for time being, please remember, I also will send you an email to just confirm what we have discussed already now. All right. So guys, I wish you all the best, and I'm looking forward to give you more shout later on. And I wish you all the best, and you have a pleasant evening. Take care. Bye bye.